Yo guys, what is up? In today's little video, I'm going to be going over how to use the fixed range volume profile. So we made a little reel about it the other day, and we had a lot of positive comments about it, and I got a lot of likes. So I figured I would cover it again and kind of talk about it so you guys could get a better idea of what it actually is and kind of what it does. So if we look at Euro USD, we can see that we are clearly in a downtrend. So we're going to be looking for selling opportunities, right? Now, we would like to get points of interest for sells, and we can do that by looking at buy to sell candles or, areas of inefficiency, just the basic standard stuff that we talk about with you guys all the time. So we look for trades based off of those things, right? But we can also look at other things. We can look at fib levels, we can look at EMAs or whatever. But what I'm going to be talking about today, as I kind of hinted, is the fixed range volume profile. So the fixed range volume profile is in the same spot as the position calculators. So I'll add it up here. And if I go to an impulsive leg in price and pull it, I can use it to find points of interest. So looking at structure here, you can see this was a high, low here. Now, would I have pulled it on this entire leg? Probably not. I would have just looked for continuations within this leg to the downside here. So to me, this is a leg, and then this is a kind of a retracement, then another leg. But we'll pull it from a couple spots and I'll show you guys what it does. So you can see with this price, so within this range, this is a leg to the downside. And this red line is at the thickest node. So these little things are called nodes. And the biggest nodes are where the volume is. And then as you can see, where there is a lack of nodes, that is where there is great imbalance in the market. So this is a really strong area of imbalance. And again, this is where most of the orders were. And I personally do not use this red line, but you can see that price actually traded right into that point and into this up close candle right here. So if you look here, this is another leg to the downside, right? So we had a leg retracement and then another leg to the downside. Granted, it is low volume, so it is a little bit difficult to pick up on, but this is a leg. You can see we create a ton of equal lows after we push up, right? And then just trickle back down. So we trickle back down, create this leg to the downside. So with the volume profile, you want to pull it on the impulsive legs, right? So this is an impulsive leg to the downside. Here, this is where most of the volume was. But what I personally like using this for is imbalance, right? So it validates areas of imbalance because it shows where there is a true lack of orders. Like a true lack of orders is from this point to this point, right, in the nodes. So you can see it perfectly tests the node that has very low volume, right? These are very thick and dark. This is very light and almost difficult to see. That's what price trades into, right? So if we go find more examples, again, this is a simple tool to use. It's not any harder to use than a Fibonacci retracement, to be honest. But you always want to be playing it with the trend, right? You always want to be playing or using this tool with the trend. So we're in an overall downtrend, but you can see that we broke structure here, right? We had a BOS right here. So after we get that BOS, we start forming bullish structure. So we can play off of that bullish structure. We push down and then we create a new high here. So this is a leg to the upside. Let's pull this on here. So here is probably not going to find something too interesting, but you can actually see price trades right into the red line again, right? So now this is a leg pullback. let's see this. Sorry, accidentally pulled it the wrong way. So this was a leg, pullback leg. Let's see if the red line falls somewhere right within here. That could be what price tested. So in this case, the red line was much higher. Not really good for a POI, but we'll just keep going so you guys can find these examples. So this is a leg. Let's actually drop to the 5 minute. And I'm just highlighting this like I'm not planning any of these out. I haven't planned any of these out for you guys. This is me just going through previous price and showing you what I'm seeing. So again, this is a leg. We pull back right into the red line, head up. Now this is a leg. Let's pull the fixed range line profile. So here, it did not pick up anything useful. It picks where most of the volume is, right? So, but within this is the actual leg to the upside, not this here. That's why if you pull it up to there like I did, it will look a little wonky like that. Oops. If you pull it up to there, it will look a little wonky because that's not the actual swing high. This is another intermediate high created after this little pause and pull back in the market. So the actual impulsive leg to the upside was from here to here. This is the leg. This is where most of the volume was, right? And price trades right back down into that. Okay. So this is me going through. I'm not nitpicking, and I know it's a little like raw and uncut, but I just want to show you guys how powerful this thing is. So you can see in terms of structure, this is a leg to the downside. You can see it push down, pull back leg. So let's pull it here. And again, you guys can see all I'm doing is finding the trend and then pulling it on the impulsive legs. Remember, impulsive legs go with the direction of the trend. So it doesn't quite reach the red line, but what you can see is, what did I say? This node is almost non-existent here. This is a very low area of orders in the market. And look at where price trades into. It ignores all the inefficiency here. And that's what I mainly use this tool for. Would you have tried selling it off of here? Probably. I would have, to be honest with you. I would have looked for sells off here. What happens? We don't get that true test of the imbalance until this imbalance. This is the imbalance price fills, and you can see that it is the highest imbalance within this fixed range volume profile, right? That's where the true imbalance is. That's why price goes up. That's why it ignores this imbalance and this buy to sell. That's the main way I use this tool, is to find the true areas of inefficiency, the true areas where price is likely to gravitate towards, and the true areas of imbalance, because this was imbalance, this was imbalance, this was imbalance, but price never quite started pushing down until it reached that last area. So you can see we have a bunch of intermediate structure here. I'm not going to focus a ton on it, but for fun, let's see. So this is just finding structure, playing it within the intermediate time frame. So you can see like here, right? So like pullback, oops, leg, pullback, leg, pullback, leg. So we get a break of structure right here. So let's look at the impulsive leg after the break of structure. The impulsive leg is from here to here. Let's pull the profile on it. And remember to pull it only on that leg of price. So this, not very useful, right? In terms of looking at this, the red line is where most of the volume is concentrated, right? So that's where most of the volume within this leg is concentrated. But what you can see is that there was inefficiency here and even all the way up here, right? And now this is a lower time frame leg, so it is gonna, fail to highlight the idea as well. But you can see this shows where the true imbalance is. This is all imbalance, inefficiency, inefficiency. So you can see, look at how small the nodes are here. There are no nodes here, and that's what price trades up into. and then a smaller leg in price like this, it probably won't be too useful. I'm not going to bother with that. But you can see this is one leg in price. So let's pull it on here and see where the true inefficiency lies. Again, you can see inefficiency here. And if you zoom into the node, you can see that the thinnest nodes are not here, they're here, and really even up into here. So yes, you could have used this entire candle, but the true inefficiency in the nodes is from here all the way up to here, not anywhere down here. There really wasn't a ton of inefficiency here. This is a pretty balanced move. However, you can see price trades into the last thin node, right? So that's kind of how we use this. I'm going to keep going through examples, but remember, it's all about finding the impulsive legs and pulling the volume profile on those impulsive legs. You can do it bullish, bearish, doesn't matter. Just gain your direction as always, and then use the tool accordingly, like this. This is a leg to the downside, all right, in a clear downtrend. So let's see where the fixed range volume profile brings us. Right here, most of the volume's concentrated here, and guess where, or look at where price actually ends up stopping. It ends up stopping at the thinnest nodes. That's the idea, right? These are the thinnest nodes right in here. You can see thinnest nodes of price. Where do we stop? We don't fill any of this up in here. We have volume here. We have all of this volume. We have the thinnest nodes here. That's where price trades into, okay? So you can see that. Now this is a leg, pull back. This isn't a real close below. This is just one entire leg to the downside. Now this one probably won't be too pretty because it works best on clean impulsive legs. But you can see this inefficiency, it did have the smallest nodes, but within this entire leg to the downside, there were some more small nodes in price right all the way up here, right? You can see there is no node here, but the thin nodes start to appear right here. So mark up the thinnest nodes of volume, drag it over, and where does price trade into? Price trades into the thinnest nodes. That's where there is a true imbalance and a true region of price that needs to be mitigated, right? The red line works occasionally. I personally don't use it a ton. I just look for the thinnest nodes, and you have to be intelligent with how you use it, right? You don't want to use it at the lowest nodes, like down here or up here. That's not much of a retracement. You want to see it really within the deeper levels. Granted, something like this makes sense. This is a leg, and then the pullback comes into a very clear area of imbalance that has very thin nodes, and price pushes down, right? But here, don't use nodes all the way down here. Doing that's unwise. I wouldn't start looking for nodes until they're right here. But you can see there was a very thin, we'll say unmitigated node up here. Unlike this, there really wasn't an unmitigated node just here. That's where the unmitigated nodes were. The unmitigated node in this case was all the way up here. Now let's see what happens if we pull it on this, right? So I'm not, like I said, I haven't picked any of these out. That's why this video is a bit uncut and a bit different in the sense that it's not really super organized. But I just wanted to record this so you guys could get the idea. So personally for me, these nodes are fine. This is where the thinnest nodes are. And you can see price reaches them and starts to chill out, right? It also almost trades into this, not quite, but almost. So this isn't a perfect example, but you can see respect structure and look at how significant this level becomes here. Price chops around that node for quite some time before actually making its way down. And you could even pull a node, or not a node, a fixed range volume profile on this impulsive leg. So if we pull it on this impulsive leg, let's see where we would get our POIs. There's a POI here, right? And then the nodes get very thin up here, but a good POI within this volume profile would be right in here. So you can see price trades into it, mitigates, and pushes down. It's not always going to be pretty, guys. That's not how it works. But when you combine it and add confluence with other things, you can see like here, here, and here especially, those are really good examples of this working out, right? So this too, let's look at this like, or we can just keep going. We'll say leg, there's a leg. Now granted, it did wick up to it, but let's see where our POIs would have been. Right here, right? So why did price trade through all of this, right? Because there was no volume within here. There are no nodes. That's why price traded all the way up. You can see, like, how would you know when this imbalance was going to stop? How would you be able to find a good POI within all of this imbalance, right? This huge imbalance move. Let's see. Where do the nodes get the thinnest? Not here, not here, not here. That's a very thin node. Right here. And they get thick right here. So this is the thinnest range, thinnest part, right? What happens, right? Price trades into that and then pushes down. Let's see if we adjust it here, right? Not as clear, but that's also not the entire impulsive leg. It's important to pull it on the entire leg so you can find where the imbalance actually lays. And you can see here, this is the thinnest part. This isn't thin, this isn't thin, this isn't thin. It's a little thin right here, but you can see it does react. But the thinnest part is here, and then it gets thick up here. So this is your range. This is where you can place a trade. Let's find some more examples. I'll do a couple more. This is clear structure. High, low, high, low. Now, where do we break above this? Right here. So this is a leg. Let's see where the fixed range volume profile gets us here. Impulsive leg, pull it. Very thin all the way down here. Now, this is just a super imbalanced move. So that's not a great example, to be honest with you. But you can see we get a pullback here, and then we create the new high here. So this is technically our leg to the upside from here to here. Right? Red line, okay, entry. Thinnest nodes here, but really all the way down here. So that's an example where it wouldn't have helped you too much. This is a nice impulsive leg right here. Where's the thinnest nodes? Thinnest nodes all in here. So you want to pick the thinnest nodes. Let's see, from here down to about here. Again, this isn't a really pretty example, but it does show you that finding points of interest with this is pretty easy, especially when it does work out well, like in some of the examples further to the right. This is a good example here. The thinnest nodes and price rest here. And then the red line, the red line is good when it shows up in discount. In some of the examples, it would show up all the way up at the top of the range. That's just stupid. But you can see here, it actually functioned as a good POI because what it does when it's in discounted regions of price, in the case of an uptrend, is it shows where most of the volume is concentrated, and that's where price needs to mitigate. It will either mitigate areas of high volume or areas of low volume, right? And that's what this shows. This is an area of high volume that needs mitigation within this impulsive leg, so price comes back down to mitigate. And then in some of the examples, like this is an impulsive leg. Here's a pullback leg to the upside. So let's see. Right here, you can see thinnest right in here. That's where price comes to mitigate. It's mitigating areas of a lot of volume because that is where the institutions had to inject their orders, or it's mitigating areas of low volume because this shows that there's only buying pressure. And we know that that is imbalance, and imbalance needs to be balanced out. So the range, the thinnest nodes are from here. They start getting thick back down here. Look at what price does. Trades down into this region and then ends up trading higher. It does end up mitigating all the way down here, but you guys can see that is not really, it is a region of thin nodes, but the thinnest nodes are in here, and that's what price ends up mitigating. And then we can try this impulsive leg to the downside. Right here. And then where are the thinnest nodes? So what you want to do, it's like 3 steps. Find your structure, pull it as in the tool on an impulsive leg. Look at the thinnest nodes, mark them up so mark the thinnest nodes up until they get thick, or just whenever you see that they start becoming bigger. Like these are thick, but this is just right here. It's just a little bit bigger than the nodes that I'm about to highlight. So just find the thinnest nodes, find out where they start to thicken up, and that's where you draw your zone. And you can see that's what price trades into. And then the red line you want to see in the case of an impulsive leg to the downside when it's in premium price. So like if the red line was up here, that would be a good region to look at. And if it was a bullish impulsive leg, you'd want to see it when it's in discount, and that's when you would use it. So I hope you guys found this video helpful. It is a little unorganized, I will admit, but that's because I wanted to just go through a bunch of truly random examples. I'm not going to sit here and bullcrap you guys and pull some, perfect examples out. I wanted to show you examples that are just raw and honestly kind of just how I see them. Like you can see here, this will be the last one I covered. Just following the rule, find your trend, find an impulsive leg, find the thinnest nodes. Thinnest nodes are here. They start getting thicker here. This is my POI, where price trades into before pushing up. So anyway, hope you guys enjoyed. If you did, comment, like, subscribe, all that good stuff, and we'll talk to you in the next video. Bye guys.